Hi traders, you are welcome back to the Forex Geek channel. Now, in this video, we are just going to be breaking down one of the cleanest ways to spot market reversals using a powerful tool, which is the Vumanchu Cipher B indicator. All right, so we want to use this indicator, divergence trading strategy. All right, so let us add the Vumanchu Cipher B divergences. Let us add it to the chart right now. All right, now, most traders chase moves, right? But what if you could time the end of a move? Not by guessing, but by watching momentum fade, even while price keeps pushing. Now, that is the edge you get by combining Cipher B with divergence analysis. So what is Vumanchu Cipher B? Now, it is a custom oscillator, as you can see, that blends momentum, money flow, and volume-based data into one indicator. All right, you will see waves, right? You can see waves right here on the chart. You can see waves, you can see lines, and all of that. You can see this green and red bar down here. All right. So, these signals, different shifts in momentum, in volatility, and all of that. Right. Now, the core idea is this: when price is making new highs or lows, but the indicator is not, you've got a divergence. And you can see we had a divergence signal around here. The indicator identified that for us. All right. And you can see yet another divergence that we had around here. Okay, now this means momentum is no longer supporting the move. All right, it means that momentum is no longer supporting the move, and a reversal or correction is likely. Let's just walk through the strategy step by step. Of course, you need to add the Vumanchu Cipher B to your chart. You can use TradingView and search the community script. Once loaded, identify swings in price that are pushing higher or lower. Okay. Now, once you've identified swings in price, right, identify your key swings, the next thing for you to do is to spot the divergence. Okay. For a bearish divergence, price makes a higher high. All right. For a bearish divergence, price makes a higher high. I want to look for a very valid example that we can identify by ourselves. All right. So price makes a higher high, like what we can see happen here, while the indicator makes a lower high. Can you see that? Indicator makes a lower high. Now, this is a bearish divergence. Okay. This tells you that momentum is fading on the buy side. So once you identify this concept, it means that price is likely about to decline. And that is exactly what happened, right? So we can see that we had price form higher highs, the Cipher B indicator formed lower highs, and eventually we had a decline to the downside. So that is the case for a bearish divergence. Now for a bullish divergence, for a bullish divergence, price makes a lower low, like what we can see happen here, right? Price makes a lower low, but the Cipher B indicator makes a higher low, which is what happened here. While price made a lower low, the Cipher B indicator made a higher low. Okay? So this signals that sellers are losing control. And what that means is that a bullish reversal is likely about to happen. And that is exactly what we can see happen on the chart. After the divergence signal was confirmed, we can see that a bullish reversal eventually took place. All right. So had it been you had spotted this bullish divergence on time and you got your confirmation and entered the trade, you would have enjoyed this move to the upside. Okay. Now, the next step is price action confirmation. you have to look for a reaction at a key level, all right? It could be a support or a resistance zone. For example, when you get a bullish divergence forming around a support zone, it adds validity to that signal. Likewise, when you find a bearish divergence happening around the resistance zone, it adds validity to that signal. Okay, it could be a support or resistance zone that is, that you are using as your key level. It could be an order block. It could be a trend line break. Candlestick patterns like engulfing candles or pin bars, and any other reversal candlestick patterns, they add more confidence to that trade. So let's say now you had a bullish divergence and then price was actually getting rejected from a support level. Right now, about the same time when you had that rejection, you notice a bullish candlestick pattern forming. Now, what comes to your mind? You are having a confluence. Literally, you have about 2 or 3 indicators telling you to buy. The Cipher B and price is giving you a divergence. You have a support level where price is getting rejected, and on top of that, you are having a bullish candlestick pattern. That would have been a good place to enter a buy trade. Like, for example, we would have considered entering a buy around here, and it was as if price actually broke out from a minor consolidation, a very minor consolidation. So you can see that was even further confirmation, because this was a breakout candle. So this would have been a good place to enter a buy. Stop loss below the recent swing low, and you can target the next key resistance for your take profit. So it's a very straightforward indicator. All right, a very straightforward strategy. You enter after your confirmation. Okay, for a bearish divergence, you enter a short trade after a strong rejection candle. That is for a bearish divergence. After you get a strong rejection candle, for example, yes, we can see this rejection candle that we had here. Can you see we had something like an evening star? You can see an evening star pattern we had here. This was an evening star pattern, a bearish reversal candlestick pattern. So that would have been a good place to enter a sell trade. Your stop loss can be just above that pattern, above the recent swing high. Then your take profit can actually be around the next key support zone, okay, for your take profit. So that's a good one. All right, now that is for bearish divergence, right? For bullish divergence, you go long after confirmation with a stop loss below the swing low, just like we did in this example. All right, just like we did in this example. Now, for your targeting, like we also did, you use previous structure levels, or you can use Fibonacci retracements or trailing stops to manage your exits depending on your time frame and style. Okay, now this strategy works best in volatile markets on time frames like the 15 minutes, the 1 hour, and even the 4 hour. The key is discipline. Only trade when the divergence is clear and price action confirms the move. To make this even stronger, combine it with a trend bias. If you are in a bearish trend and catch a bearish divergence at a lower high, that is a high confluence trade. Okay, so hit that like button, subscribe to the channel, and turn on notifications to stay sharp with strategies that actually work in today's market. Have you tried the Vumanchu Cipher B already? Drop your thoughts or questions in the comments. Let us build better trades, one setup at a time. Catch you in the next video. Stay sharp, stay patient, and always trade with confidence.